Hey there, traders. It's March 14, 2025. We're back for another daily recap. I'm Sam Morton. So, did they close above the zone? No, they didn't. They tested the top of it. It'll be pretty clear how much they reacted off of that 563.65 when we look at the 1 minute chart of the entire day. They closed in the middle of it, and we'll look at a couple other charts. The bulls made an attempt at least. If we go back to the hourly chart, 60-minute chart, remember last night I said they were down here. So this is the breakup candle, 552 I think it was, the bottom of this breakup candle. I said they had a chance to bounce from this area, and they did. So that was a pretty good place if anyone chose to go long there, maybe in the futures overnight or something. I didn't, just wondering if anyone heeded that call, because that's a bullish consolidation, and the timing was pretty good for them to jump up there. We jump all the way up to a 1 week chart, so I'll point a few things out. The week ended with a lot of volume, which is good, not too surprising, and they gave us kind of a tail candle here. So where they closed, while it is in the middle toward the top of this zone, it could be the bulls trying to make a statement that they're going to go higher eventually. Maybe they come back down, retrace some of this, and then take off. But what we do know is this zone is important, it continues to be important, and probably will be important next week. How about a monthly chart? We're halfway through the month of March. So the low of whatever this month is, November, was 567.89. So just put a line there. So we have 2 more weeks for this bullish consolidation to play out in the upside. A lot can happen in 2 weeks, and it looks like the bulls are trying. If the month closes below that line, and certainly below that zone, then something else is going on, and we're probably going to see lower prices. But let's not get ahead of ourselves. Just for the day here, they closed the day in the week in the middle of the zone. It's kind of good. It's not great. It's not bad. It is what it is. Here's a quick look at the levels that were sent out this morning, along with the game plan, what to expect. It was before the opening bell, almost an hour before the opening bell this morning. And I was kind of the position that I wanted to see what price would do with that zone. I had a feeling they would go higher and kind of get into it, but I wanted to see if they would get above it first, because price could have been rejected anywhere within that zone. And just me being kind of conservative, I'm not sure I would have gotten into anything anyway. There was a data release at 10 a.m., and that was the catalyst for a pretty big drop, relatively speaking, which actually helped out a trade. We'll look at that in a minute. I just made a note that it wasn't likely I was going to trade today because I was busy. It ended up being about 10:15 or so, quarter after 10, I got back to my computer. So things had already happened at that point. I recorded it so we could watch it for what it's worth, but I did not take any trades. Here's a 1 minute chart. Price opened down here somewhere. They're coming up into 558.50. If you went short, you'll be going short at 558.45. If we adjusted this level down 5 cents toward price, that gave you a base hit. And I'll just show you what this looks like since we kind of got this thing spread out. The green line at 558.05 is the profit objective. That's 4 S&P points from where the short trade would have been entered at 558.45. And the red line at 558.85 is what I call the fumble threshold, which if price gets above and does certain things, then a plan B needs to be invoked. It was not a problem this morning. Price did get out of the money, but it was just a matter of time before they came back down as designed. And here's that 10 o'clock data release. This is 10 o'clock, 10:01. They dropped quite a bit. So my question is, if anyone went short here and withstood this, played by the rules, didn't worry about being out of the money, just gave it time, did you let this thing give you more than 4 points because they were falling fast? If you had a limit order on your chart just to buy back your E-mini contract or contracts at 4 point, you would have had your 4-point base hit, but they fell pretty fast. So it's possible to get quite a bit more. Just curious if that happened for anybody. And then price got up to 561. I don't adjust levels on zones. If you had, it would have been 560.95. That would have been a near miss with a spike here at 11:01. Price got up to 560.88 and pulled away pretty quickly. So that could have been a clue, but we're just going to say, since you're sticking to a process here, that you would have gone short here at 561 on the penny, which means your short trade right here at around 11:19, you would have needed them to come down to this target at 560.60 to get your 4 points, but instead they got out of the money and got above the fumble threshold, the red line at 561.40, and a fumble signal did materialize, and the trade would have been 7 3/4 points out of the money. You would have reversed, and you would have had a base hit as they continue to climb. This little jump right here. You would have been out of that trade when they came back down into this level, and enough time had passed. You're welcome to take this for a long trade, because at this point, the expectation is price is going to go higher. It was similar to this first trade over here, where this long trade at about 12.12 or so, your trade would have been out of the money for a while, but they bounced up. You would have had your base hit here. This thing here didn't happen in the E-minis. It's kind of an anomaly, but your E-mini profit would have been reached here. So that was base hit number 2. So you had a fumble and 2 base hits. That was it. No more long or short trades at this level. And when they hit 563.65, that high of the zone, it was too late to take a trade. Although, as you can see, it worked. And then in the post market, they came down even a little farther. I think currently 561.44. So of course the market's closed, but a pretty drastic reaction off of 563.65, the top of the zone. Right at the end of the day, I'm not going to take any trades within 30 minutes of the closing bell. So this was off the table per the rules anyway. So that's what you would have done, treating this as a process. So as I mentioned earlier in the game plan, you saw in the email that I was busy from 9 a.m. on for a while, almost an hour and a half. So I just started the recording here before the market opened. That's why you see this, and sped up pretty fast here. So the market opens at 9:30. I was nowhere close to my computer. I just let this thing go. I just want to show you what they did and the fact that I did not do anything, just for record here. I got back to my screens is about 10:15 or so. So I'm moving ahead here to show you that this is what I saw what happened. I made all the levels dotted, decided not to do anything, no matter what they did, and let this thing go till 11:30. 2 hours of activity. As I said yesterday, that's what I'm going to do going forward when I have the chance to do it. So there's the 2 hours until 11:30. No trades for me, but the week ended pretty well regardless. Had some pretty good days this week. And that is evident by our tracking log. Where would you have landed if you were trading 2 contracts per the rules? You would have had the 2 base hits, but that fumble, you can read the notes, see the color-coded levels here. And this level here at 563.65 with the last one was not hit because of that window of time, just a rule that I have. So you would have ended in the green slightly. And the Sam's trades over here, no trades taken, 3 levels that were hit, nothing gained, nothing lost. I'm going to point something out here. So we're at 61% for basically 2.5 months. Tomorrow is March 15, the Ides of March, halfway through the month. I just want to show you where we were last year. Remember 2024, this is the entire year, was 183% rate of return. If we look at the same time period, so January 2nd, because the 1st was a holiday, of course, of 2024 through March 14, we need to go back to 2024. Here's March 14, so we're going to not even include March 15, so we're accurate here. So this time frame gave us 34.85% last year, and you know that you're in it pretty well. Just want to point out that we're doing pretty good so far this year, even with a few of these TKOs we've had. Just to point out, at this point last year in 2024, we had a handful of fumbles and TKOs, which in one scenario are essentially 2 fumbles in a row. It happens sometimes. You can see the profit and loss metrics and daily averages. But so far in this year, 2025, while we've had more fumbles and TKOs, we've done better overall in terms of our rate of return in the same time period. And this, as you know, is treating every level the same way every single day and letting the process work as intended. So that's a wrap for today and the week. Thanks for watching. I'll be back Monday with new levels and a game plan. And while this was an important week and we had some fun, made some money, I showed you what the weekly chart looked like. So what they're kind of telling me is the fun and games are not over. There's probably still volatility on the horizon, and we will find out next week. I'll talk to you again soon. Have a great day.